Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and my name is Irina Orushkova, and I'm your nonprofit auditor. I created these videos to help nonprofit communities to explain some accounting issues that I encountered during my career. My office in downtown Oakland in California, and I serve nonprofit organizations providing assurance services. These are not authoritative videos. These are just simply videos where I share my knowledge and experience with nonprofit community. And this is the video number 3 for fiscal sponsorships. In the video number 1 and 2, we discuss who can be fiscally sponsored, what the parties of this arrangement that called fiscal sponsorship, that is project and sponsor, what is the responsibility of both parties, how this responsibility has to be documented and understood, and what is legal and compliance obligations of each party involved. And in the last video, this video number 3, I want to talk about accounting under this agreement. When both parties sponsor, which is 501c3 exempt nonprofit, and project, who is either individual or group of people or entity that needs to be fiscally sponsored, get an agreement to be sponsor in a project, there's some accounting needs to be involved. And as we discussed in the video number 2, the agreement needs to outline that sponsor is responsible for proper accounting of the grants received and expenses paid for the project. What it means that very often, even a small nonprofit that's gonna start be its sponsor for one or two or many projects might reach specific thresholds. For example, in California, it would be $2 million of revenue. When nonprofit will receive $2 million in revenue, that nonprofit need to do financial audit and submit it to Attorney General. In other states, it might be other requirements. Therefore, even existing 501c3 must be under more obligations than before they become a fiscal sponsor. And that 501c3 need to make sure before they take under the wing any project if that's going to cause any additional responsibility. The main responsibility for fiscal sponsor, it's a proper accounting for revenue received on the behalf of the project and expenses paid on behalf of the project. The main area that nonprofit 501c3 needs to understood that very often that project is a separate program within the existing 501c3. And separate program meaning that from the fiduciary responsibility, nonprofit have to keep these funds separately and not commingled with the rest of financials, but also from accounting standpoint, it needs to be proper accounted as a revenue and expenses. So when the revenue comes to a nonprofit organization in terms of the contracts, grants, the existing 501c3 is responsible to make sure that they understand the grant, have a full copy with all the appendices, and understanding from other sources what type of income it is. Is it earned revenue? Is it grant? Recorded as their own revenue in the accounting system, maybe separate in the separate project, but it's their revenue. And keep copies of the contracts, agreements for their reporting requirements. And same with expenses. They need to make sure every expense in any check that they pay They need to understand what kind of expense it is, record it properly by its, not only by the function that it relates to this program, but also need to properly record as the nature of the expense, whether it's going to be supply, it's going to be advertising and so forth, and the proper type of expenses. Also make sure that if it's a prepaid, even though it was paid, so you should not record as an expense, but as for your own nonprofit, you need to record this as a prepaid expenses. Therefore, proper accounting under accrual method of accounting under GAAP is required for the project revenue and expenses as well. What it means that very often, even though project has type of independency in fundraising, the project and the sponsor need to have an open communication to make sure that the project provide all necessary documentation for the sponsor to record revenue and expenses accordingly correctly. Very important to remember that nonprofits, 501c3, cannot just simply net revenue with expenses on the income statement and just report zero. Once again, because the program activity and the project, each is a separate program, and they have to be reported at gross, meaning that revenue needs to be recorded as a revenue, and expenses, each expense needs to be recorded separately. Additionally, as we discuss again in NAP number 2, project typically pays between 5 to 10% for the admin work that sponsor does. Therefore, this type of income is retained within the fiscal sponsor, and they do not pay that type of fee out as an expense on behalf of project. They keep it as their revenue. At the end of the year or some period of time, fiscal sponsor, which is non-profit 501c3, have to prepare some reports to project to understand how much funds they received, what were the expenses that will help the project better manage their money, to understand where funds were spent. And this kind of reporting can be done monthly, quarterly, annually, depending again on agreement between parties. The sponsor also needs to understand the sources of the funds that project receive. So the project will be receiving funds either from government aid entities or it's from private sources, but if they have a very unique financing or administrative reporting, the project and sponsor need to make sure that they produce this kind of information so the project can actually adhere to these requirements. Because each donor can have their own requirements, and they might be financial in nature, such as submitting detailed expenses in what format. So if it's responsibility of the 501c3, which is sponsor, to keep track of all the expenses, the project need to make sure that sponsor keep enough details and enough information for the project and sponsor to provide such information to donor. So sponsor organization and project have a lot of responsibility between each other to make sure that the sponsor organization not only keeping track expenses from financial standpoint under the regulation of GAAP and adhering to local rules and regulations, but also understand the grants and contract obligation of the project to make sure that all these details are also are somehow documented within accounting system so the project can be in compliance with the donors and contributors. Just to summarize, agreement between project, who can be one person or group of people, and sponsor, 501c3 public charity, is very creative contract, meaning the both parties can agree on their terms, how they see them working for them. So it means that each agreement needs to be understood, drafted, that it's applicable for both parties, reviewed and understood by both parties, and ideally or additionally reviewed by legal counsel and signed by both parties. The agreement needs to be periodically reviewed, make sure that it's still in place and still applicable. The agreement also needs to outline responsibility of both parties, how the parties getting into agreement, and what would be the exit of that agreement. It's very important to understand how the relationship will end. Also, both parties need to have a good and clear communication. Understand that it's even though both parties have enough independency in their own activities, but 501c3 is the agent in relationship. This is agency relationship. So both parties are responsible and can for each other actions and need to be very careful in conducting themselves, understand what they can and cannot do, what the benefits of such relationship, and definitely have a proper accounting reporting accounting and reporting policy and procedures established that will be in line with the agreement. And if you're a nonprofit will be looking forward to become a sponsor, it's a great opportunity to increase its operations and its visibility, but it also involves a lot of responsibility and understanding of any challenges that to become a sponsor might cause. And if your nonprofit gets enough education and understanding of the agreements, you'll be in a good space. Once again, please do check www.fiscalsponsorship.com. It's a great website that has a lot of resources that every project and nonprofit organization can benefit from and learn if your organization is looking to become a fiscal sponsor. Thank you so much. Hopefully it was useful. Hopefully you learned something, and thank you for being here with me today. That concludes presentation about fiscal sponsorships. See you next time. Bye.